Hi, everyone. Welcome to Unchained, your no-hype resource for all things crypto. I'm your host, Laura Shin. Thanks for joining this live stream. Before we get started, just a quick reminder, nothing you hear on Unchained is investment advice. The show is for informational and entertainment purposes only, and my guests and I may hold assets discussed in the show. For more disclosures, visit unchainedcrypto.com. Also, you'll notice something new in today's episode. Instead of our usual ad spots, we're introducing a different sponsored format. We interviewed our sponsor, Walrus, a project we actually use at Unchained for data storage, and throughout the episode, you'll hear short excerpts from that interview. Even though those segments are sponsored, we also think the material is genuinely interesting and worth your time. We're going to start with the first of those clips now.
Maybe we could put it into two categories. There's a very practical, hands-on problem with data, which is in this AI era, we need gigantic amounts of data. And not only do we need gigantic amounts of data, that data is then used to create even more data. So we are exponentially increasing the amount of data every single day. This is very expensive to store, and it's expensive not just in terms of money, but in computing power and time and speed. And then you have different types of data. So structured data, all well and good, especially when we're talking about a blockchain. But the more we're using blockchains and AI together and big computations, it's unstructured data that we don't really have or haven't really had anything super performant anywhere to store it or calculate it. And that's actually how Walrus was originally envisaged, that small data, structured data that can be stored on a blockchain. But the longer that blockchain exists, the more data there is, the slower it is, the more expensive it is. And then once you want to do things like store large unstructured files, like a video or a song, it's really far too expensive to do that on a blockchain. So we built Walrus as not just data storage, but a whole data layer to handle that sort of amount of data. As it turns out, we've found out since we have been live that people want to use it for small data too. So we have also now solved that problem with a new technical release called Quilt.
Today's guest is Markus Thielen, CEO of 10x Research. Welcome, Markus.
Hey, Laura. Thanks for having me.
Yeah, excited to chat with you. So the prediction market space is really hot right now. The two biggest players, Polymarket and Kalshi, both have sky-high valuations. They're intensely competitive with each other, as I'm sure most people on X know. And that's probably only going to escalate now that they're newly competing on U.S. turf with the entrance of Polymarket into this country. But Gemini, Robinhood, there are others who are also getting into the game. And at the same time, the category is facing some regulatory headwinds. So, despite all that, none of that has stopped prediction markets from just increasing in, trading volumes every month. November was at just under about $2 billion for that month, at least for Polymarket and Kalshi. How do you view this current moment in the trajectory of prediction markets? Where do you think we are in their adoption?
Yeah, so of course, the interesting aspect is really that actually the volumes have increased and the volumes are actually relatively constant now. I think we're trading actually around $1 billion now per week. So that's quite elevated. And it's almost like as when Bitcoin started to decline from, 125,000, that's when really the volumes and the activity started to increase. So the number of users actually increased from 70,000 to almost 250,000. Again, per week. So these are actually really big numbers. A lot of people are involved. And of course, it has to do with that Kalshi and Polymarket, together raised around $3 billion during the last couple of weeks. So there has been a lot of, marketing firepower really raised. And I think that's when we look into 2026, a lot of the stuff is on the horizon that it's going to broaden out. And I think more investors and more traders are actually using the platform, to hedge some of the economic risk, some of the macro risk, and just kind of like, to speculate. But around 90% of all the volume is still sports betting. So we on the crypto side, it's really like a small niche, but nevertheless, it's growing. And I think it's quite interesting when we look at it from various aspects. So I would say we are still at its infancy because, these platforms weren't really, anywhere a year or two ago. Volumes really started to pick up only really after the Trump election. That was the first, huge push. But I think when we look at, last month's, activity, really, how many users actually visited those platforms, as a comparison, we have around 40 million users visiting Robinhood, 30 million, I think it's like 32 million for Coinbase, and we have nearly 20 million for Polymarket. So it's definitely where, these prediction markets are becoming more interesting from a user perspective and attracting a lot more volume on all sorts of things. And I think that's where we are in the beginning. And when we enter 2026, a lot of the stuff is moving, higher. And as you said already, Gemini just won a prediction market license as well. So the competition is heating up and a lot of people want to kind of, go into the space too.
And I just wanted to ask you about, what seemed like a connection that you made. You said that just as the price of Bitcoin was going down, that trading in prediction markets was going up. Are you implying there that some of the people who had been trading Bitcoin are now switching to trading in prediction markets? Or like, how would you figure that out?
I mean, I think it just seems a coincidence. I think it would be really, far-stretched that you have suddenly people, turning their back on, crypto exchanges and suddenly trading crypto or other trades really on prediction markets. I think that's sort of like something that we try to look into, we try to figure out, but it's really not the case. And when we ask, for example, our subscribers, not too many are trading. I think a lot of people are interested in it, but also the volumes are not necessarily there. A lot of the contracts, a lot of the bets are relatively small, so they don't really have the liquidity size that, we are used from the crypto markets where, volumes are 100 billion, 200 billion, 300 billion, sometimes even on massive markets. And it's still a very niche market, but nevertheless, I think there are some interesting opportunities that can be found. But nevertheless, I think it continues with the gamification of, financial markets. People want to be entertained, and it's just a matter of, how you approach the markets from an entertainment or from a probability perspective. But nevertheless, it just broadens out, and it's just sort of another tool. We can look at it from, from historically, how people, for example, arbitrage various spreads, various products. And that's how we kind of approach this exercise, better to look into prediction markets. Is there a way to structurally arbitrage certain trades or not?
And, out of curiosity, like it sounds like you trade both. You trade the crypto markets and prediction markets. How would you characterize the difference in terms of, trading in those two types of markets?
So, of course, I think what a lot of people are not really aware of, but prediction markets are sort of, exotic option trading, strategies. It's really, about the probability and understanding the probability and really being fast with the news. And I think it's, more determined outcomes. It's really like a yes or no. It's not halfway. It's, one party loses, another party wins, really. With, of course, sometimes the exchanges in the middle versus, of course, with assets, on crypto exchanges, like everybody can win who has exposure to it. So I think it's, of course, a very different, narrative. It's a very different approach. And I would say these two are, vastly really different. But I think it's really the matter of, how to really approach the prediction markets, because again, I think in a hardcore option terminology, it's really like one-touch barrier options that people need to understand how to price them and the probability of those factors, and not necessarily, in crypto buying into the narrative, buying into the theme or, the story really. And I think that's kind of like really the big difference. But again, I think for sophisticated traders, which you have on both, venues or in both kind of categories, I think they approach it, very similarly. But of course, everybody is aware that a lot of the crypto exchanges have their own, internal trading teams or treasury teams or, liquidity providing teams. They might be affiliated or not. Of course, a lot of the stuff has come out, in the aftermath of the last kind of like 2-3 years, really. How these exchanges engineered liquidity initially, because they needed a sophisticated market maker on the other side. It's not really possible to match retail against retail on day one if there's no liquidity. And without liquidity, nobody really trades on exchanges. And I think we have seen this, with the early days of BitMEX, where I remember Arthur Hayes was, giving presentations in 2015 in Hong Kong, presenting basically, I have all these Korean retail investors that are buying leveraged futures, with 200% implied, volatility of funding rates, really. And he wanted, institutional traders on the other side to really arbitrage the market. And I think here it's very similar where these trading teams, and I think what a lot of people are also not aware of, that there are also sophisticated trading teams on Polymarket, on Kalshi. Some of them have their own teams. Some want to build their own trading teams. And these are people that's doing this 24 hours a day, really, and really sophisticated. And I think that's where the similarity is a little bit in building liquidity, especially because there's so many, unique contracts that people can trade and unique bets, but you still need market makers to, be willing to take the other sides, because otherwise you would not attract the flow. So it's really kind of the patient market maker versus the impatient taker, really. And I think that's a little bit similar as in crypto. So there are some similarities here, but overall the structure is quite differently. So nevertheless, I think it helps for sophisticated players to move from one platform to another if there are arbitrage opportunities.
And so I want to ask about the two biggest players. As we mentioned, there's a whole bunch of other ones getting into the space, but let's just narrow in on at least, the competition as we see it now, which primarily is between Polymarket and Kalshi. And, we kind of alluded to the fact earlier that very soon they will be competing head to head in the US. The Polymarket app is sort of in the US is sort of just rolling out, it's like in a beta period. Polymarket raised $2 billion at a $12 billion valuation. Kalshi raised $1 billion at an $11 billion valuation. How do you kind of handicap the two companies in terms of their relative strengths and weaknesses?
So, the key difference is that Polymarket is really, a crypto-based platform, and on-ramp is, very, very quick, or opening account is, super fast. I think for non-US investors, somebody was just sending me a screenshot. He's on the waiting list number 240,000. So there is a lot of people wanted to onboard, versus, of course, if you're not based in the US, the onboard, literally takes 2 minutes and you can fund your account with cryptocurrency. And again, this whole process, it's a similar playbook as some of the crypto exchanges in the early days used to do. All you need to do, have is really an email account. And then basically you get a security code, and then that's it. And then you log on, and then you have a wallet address, and you can fund the wallet with a different, cryptocurrency or with a stable coin. And then basically you can, place bets. And this whole process takes like less than 2 minutes versus, if you're, of course, regulated in the US, if you're trying to be in the US, the process might take a little bit longer because there's a long backlog. And I think that's, one difference, really. But it's also in terms of, liquidity. I think that's how institutions look at it. It's some type of bets that people look at it. As I was saying, around 90% of the bets seem to be really on the sports betting side. So everything else from, event contracts, or crypto ideas that people are trading on is relatively small. And of course, when we go into the elections, I think around $3.7 billion was at stake, really, at the US election. So that's when really the market heats up. And I think that's where there's sort of like overlap really on the sports side. They overlap on some of the, political outcome bets. And I think the differentiation will be, I think, less and less. I think it's really in terms of like how some of the bets are being rephrased, let's say on the crypto side. But nevertheless, I think they will just converge wherever the volume will go. But I think people can also, of course, put up their own bets in the sense. You can propose your own bets. So it's just a matter of you coming up with a great idea and it's getting approved. And then you can place a bet on both sides. And, if there's different odds, you can basically arbitrage the market there as well. So there are different, there are differences in style, in regulation right now, but this is going to converge, and because they're both looking for, the US market, which is, of course, is the biggest market there is.
And what about these different new competitors that we mentioned? So Gemini, has its Gemini Titan. Robinhood just had an announcement with Susquehanna. I forget what month this was, but just a few months ago, Limitless had a controversial token launch. I'm sure there's others, but, I wondered how you kind of look at these different new entrants and which ones you think could be viable competitors.
I mean, I personally think it's really these two big ones. I think they dominate everything, because in the end, I think it's all about liquidity and volumes and attracting the volume like very quickly. I think we have seen this on the cryptocurrency exchange side as well, where really volume is key. And unless there's like a regulatory event that, for example, of course, hurt some exchanges in the past, from Mt. Gox to BitMEX and so on. But what we have seen how Binance has grown, and Binance with their volumes has attracted, of course, more and more, and has manifested themselves really as the leader. And I think everybody else needs to really come up with really smart strategy to attract some of the volumes. I think we have seen this, how some exchanges have tried to move into the option space and win their market share. But I think it's very similar, where if you have a smaller prediction market, you need the volume. And for the volume, you need some professional traders. You mentioned already Susquehanna, who are very active, of course, on the professional making side. And I think they're working with various of these exchanges, because, that's really their role from a market maker side. But it's really, how do you engineer the volume? And I think this has always been the issue for crypto exchanges. And I think this will be the same for these prediction market exchanges.
And so at the moment, like between the different competitors, who do you think is ahead in terms of volume?
So, of course, it depends a little bit on contracts, but I think, of course, Polymarket is a little bit ahead. Again, if you look at some of the monthly visitor numbers, for last month, it was around 5 million for Kalshi, and it was 19 million for Polymarket. So I think there is, of course, a larger lead. And I think it has to do, of course, with Kalshi was focusing a bit more on US investors, whereas Polymarket is, of course, global. As I was saying, the onboarding is a little bit easier. I think they have a little, leg up really over the last kind of 1 to 2 years, being, speaking at some of these, crypto conferences or other events, and being a little bit more out there, maybe in terms of marketing. That's why they have a little, step ahead really. But in the end, as you said, the valuations is very similar. Kalshi has probably, a better revenue model, because they're charging a fee, that is a little bit elevated for some, or, versus Polymarket is a little bit, less fee generating right now. But I think they can, because it's a crypto exchange, they don't need a lot of the overhang. And again, they have not really focused on the US, where maybe there's a lot of a lack of compliance that wasn't really that important. But of course, there's all changes now because they're entering the US market. So I think there has been some differences, but they're all going to converge. It's just really like a question, who do you what is really the strategy to win more users, and of course to win and to partner with these bigger market makers, because again, it's all about liquidity, and that has always been the big problem for crypto currency exchanges. If there's no liquidity, then there's no retail investors, then there's no institutional investor, and that's sort of like the how the ball really rolls down the hill. And I think it's very similar here as well.
Yeah, and this might go to the controversy that was on Twitter this week, but when I look at how the block, it has different bar charts that show the volume, and it actually looks like in recent months, like literally in the last 2 months, Kalshi might have overtaken Polymarket, but I'm not sure exactly how this is being calculated, because like I'm not going to get into all the details on that, but for various reasons, some of the charts, like I would have to dig into it a little bit more to really understand what's going on. Um, but yeah, maybe some of it also depends. Like I think, Kalshi is leaning more into sports. So some of it might have to do with things like that. But I did also want to ask, some of these markets are structured differently. Like you wrote about this one in your blog post, some of them use traditional limit order books. Some of them have a different structure. Can you talk about that and how that might kind of influence how a user might think about, trading on these?
I mean, from an end user perspective, I don't think it really matters too much, right? So they're using the limit order books, as you said. So it's really about being patient makers versus impatient takers. And it's really how the market makers would basically spread a bunch of orders and just, for example, just wait that the retail investor would just hit the bid basically, or lift the offer really, and just just place the order and literally just pay the spread, because sometimes the spread is wide when there's not a lot of liquidity. This again, it's very similar to crypto exchanges. So you need to have a lot of market makers basically, so the liquidity is relatively tight. And I think that's from a user perspective, it doesn't really matter too much as long as there's volume. That is really the key, because otherwise you cannot really execute. Otherwise, the spreads are just too wide, and of course, every time you cross a spread, basically you lose money. And I think that's sort of like very key how how these prediction markets really need to work on this. But as we have seen that there's been some professional partnerships being done with market makers. There also, I think Kalshi has their own Kalshi trading team that are sort of like a market maker in the background. Of course, there's affiliated with the exchange, and Polymarket is trying to build this as well, because again, volume is key. So it doesn't really matter too much from a user perspective if it's a limit order book, but that's sort of like the standard as we have seen. But that's also, of course, what we have seen that the Robinhoods, they're receiving a lot of money with a payment for order flow, on the stock market. So I think there are some similarities here. And of course, the volumes are still relatively low with $1 billion a week, but they might increase. And I think we have seen, for example, Token Terminal has, data, on terms of the volumes where we can compare it, if Kalshi is ahead, or if Polymarket is ahead. And maybe it has to do with the NFL season, that is just, started where people are betting more on those games, versus Polymarket maybe, on other factors, because again, the user base is more global and maybe they don't care too much about US sports in the sense, right? That's how I would kind of like assume is probably the volume a little bit different. But I think the bottom line is really that they have raised $3 billion, which is a lot of money. And they're really going for expansion, in the US. So I think there's a lot more stuff happening than next year.
All right. So let's talk a little bit more about next year for a moment, just because, we've set the stage with these two main initial competitors, all these other new entrants. One of the events we didn't talk about, but is important that we should discuss, is that Polymarket will be launching a token, Poly. Interestingly, they're going to do it via an airdrop, which is a mechanism that's not actually favored at the moment. But I'd be interested to hear, how you think Polymarket can make that airdrop a success and use it to help them, cement their dominance.
Yeah, I mean, I think as we have seen in the past, I think airdrops have become, popular. Of course, some of them, had great success or not. But I think here, the interesting aspect is really that Polymarket is a crypto exchange, right? It's all really like on chain. And that's where, the data can be actually analyzed quite well. The bets can be analyzed. We can see, where the bets are being placed. But I think it's also like a key factor, was a key value proposition for us to kind of like write, the report, or write the reports around it, that the airdrop is coming. I think it has been confirmed by, by the CEO, founder, has be confirmed by the head of growth. So the airdrop is coming. And I think because everybody can simply, open an account there, so you get a wallet address. So the airdrop can be just, easily, find its way into your account. And I do think it could be quite successful, because people are looking for airdrops, right? That's one of the key strategies for, for example, to invest the BNB token, because you would have made another 10% this year just simply so airdrops if you would have sold them the first day. So I think people are looking for these sort of free yield opportunities. And definitely from a crypto perspective, that's kind of, I think people would favor, the Polymarket platform, because if you trade there, you qualify. And because the volumes are, I think, concentrated among a few large players. So even if you'd say you trade, I think we looked at this and we read some, other research around this. If you have traded like $50,000 worth on Polymarket, you would have been among the top 1% of the players. So it's almost like, I would say, relatively easy, at least until, now, to be among, the larger players and then qualify for this airdrop. And I think, it can be quite valuable because, again, what you also said, the competition is really heating up. And I think you want to reward your users. And in the past, it has always been very favorable if you reward your users. We have seen this, of course, with Hyperliquid, where, I think it started almost like exactly a year ago, with the token launch there. And I think then, volume started to increase and go in sync. And that this can be here as well, because everybody who holds the token will suddenly become, almost like, a marketing person for the protocol. So that's why I think it's quite interesting, and the value proposition. And I think it's going to come for sure. And I think it's going to come sooner than later. So I would assume it's probably going to come, end of Q1 next year, because I think they want to get a leg up. And again, they are already crypto native, so it shouldn't really take too much. So that's why the time to get involved, the time to look at a few things is really now, we think.
And do you think that we should expect that some of the other platforms will do the same, launch a token?
Well, I personally don't think so, because it takes actually a lot to become really a crypto native platform, and I think that's really their big advantage, right? So I mean, if Kalshi suddenly launches a token, but they're not really crypto native, I think it would be a lot more difficult to kind of tie into what is really the advantages. Are there going to be buybacks? Are there going to be reductions on trading fees or anything, versus on a crypto native platform? I think it's a lot easier. And this is what we have seen, in the past, how, tokens from exchanges, have actually been used for, rebates, or they have been, for other special treatments, for higher tier exposure. And I think in the past, I think when you accept, of course, the FTT token, but if you look at in general, crypto exchange tokens have done quite well, right? I mean, that's kind of like the interesting aspect here. That I would also draw a parallel. I mean, when you look at, you can name like endless tokens, really. But normally crypto exchange tokens are doing well. So it's worthwhile having exposure to them. And of course, if you get them through an airdrop, that's probably not a bad idea.
Okay, so I'm just drawing a blank. The only one that comes to the top of my mind is BNB. But what are some of the other successful ones?
Well, I think when you look at, BigGet has a token. I think that has also done, quite well. I mean, OKX has a token. I think you can look at a lot of the crypto exchange tokens. They somehow really have done, outperformed, especially and almost like surprisingly this year. There's also, an exchange in Europe. I think it's called Whitebit. I mean, I've never heard of it up until May this year. And then, summer was flashed in our systems. And I think since May, it is up like 100%, versus the overall crypto market has like struggled. And I think the BitGet token has initially done, quite well this year as well. So it's interesting really that even in a market where, for example, altcoins have really struggled this year, that some of the exchange tokens, despite the potentially lower volume that some of the altcoins are, having, the exchange token have outperformed. And of course, Hyperliquid has done well from where it launched a year ago. Of course, it has given back some now. But I think in general, it gives some sort of like exposure to the ecosystem. So, and I think that's why it makes sense. And, as you said, BNB has done, of course, phenomenal well. It's up a lot, of course, and users still generate, revenues through some of these airdrops. And maybe that's also something where there can be like a permanent, airdrop to some of these token holders. So I think there can be, smart tokenomics here being structured and really help, establish themselves at least in the crypto space. But again, a lot of the trading is in sports betting, so that's a different market. But nevertheless, I think it's a niche market that can be like built out.
All right. So in a moment, we're going to talk about how it is that Markus trades prediction markets. But first, we're going to take a quick word from the sponsor who makes this show possible.
Walrus is the home for data that you really value. AWS, Google, they're all great for most data needs that people might have. Data such as comments on my Instagram photographs. I might not care to keep those forever. It's not hugely important data to me. But my, chain history of my DeFi protocol is something that's very important to me, that I know at some point in the future, I'm probably going to get some regulator knocking on my door, and I'm going to want to be able to prove that that data is exactly what I say it is, that it has not been changed, that it was uploaded by me, and therefore it provides that audit trail. So there are use cases that a platform like Walrus allows you to build that just doesn't currently exist today, either in the decentralized or centralized world. And they tend to be the use cases around people who think, let's say, like uptime is very important. So where your business or, your data is absolutely critical that it is available 24/7. Because something like Walrus, it is almost impossible for it to be taken down. It's where provenance is very important, where I need to be able to prove that this data is the data that I say it is, and where security is extraordinarily important. And I can also guarantee that it can't be stolen and it can't be hacked. So they are the use cases that will be using Walrus. And in 5 years' time, I think what we will be seeing is, in this world of, prolific AI and AI models, the world will be storing their data and the outputs of that data on Walrus, and they will be trading it with other agents or other enterprises who want to access that. So what this gives you, it gives you the security, it gives you the provenance, it gives you the reliability. And with Walrus, you also have the ability to actually monetize this. So I got all this security, and now I can actually generate a revenue stream off it that was not available before. And I can guarantee to the person that's buying that this data is trustworthy.
You wrote a great series of posts on how to trade prediction markets. But before we get into kind of like all these strategies and everything, just explain how the risks in trading in prediction markets differ from regular crypto trading.
So, of course, in prediction markets, these are, event contracts. So there is a definitive end to it. It's similar to option and some of the, the early days of the crypto futures where they had an expiration date. Of course, now everybody trades perpetual futures, but options, of course, have also like an end date versus, let's say altcoins are sort of like an option, an open-ended option, because as long as you hold it, you have the potential, probability or chance really to make, back your money or to really make an outsized return versus, prediction market. There is a definitive end date. Some of them are longer, some of them are shorter. And the interesting aspect is really that the way how they work is really a probability based. So it's a barrier option. And you have to really understand what probability you sort of, implying and where you're really buying it. I mean, they tend to work that you're buying a contract that is somewhere priced between, let's say, 1 cent and 100 cents, so between 1 cent and $1. And if you're buying it at 60 cents, you're basically putting in a 60% probability that this event will happen, yes or no. And most of them are structured as yes or no events, really. And I think that's how they really differ. And so you need to get really the timing right. So if you're, for example, betting that Bitcoin would reach 100,000 by end of the year, the bet is, of course, over, on December 31st. But if you buy Bitcoin, you can hold it open end. And if suddenly Bitcoin only reaches, 100,000 on January 1st, you still can make money with your Bitcoin trade, but not really with the trade on, prediction market because it would have expired. So it's really that these contracts are sort of probability option contracts and not sort of, taking, a longer term view, because also the probabilities can shift, right? We have seen this, of course, when Trump suddenly was interviewing a new Fed chair, or, this week, then the probability for the highest probability candidate, started to decline. So you need to be fast with the news there. I think it was the FT who came out with the comment that Trump is interviewing more people this week. And then the probability for Kevin Hassett, I think, dropped from 80% to 70%. And I think it took a couple of minutes. But of course, as a professional trader, they would sit there, see the headline, maybe adjust their book, reposition themselves, and can take advantage of it. Versus if you're only casual trading on these markets, you might see it a day or two later, or wonder why the P&L has changed. And that's, I think, how professional traders really have an edge, because they're in the news flow, they're in the volume flow and the liquidity flow, and that really can make a difference.
Okay, so let's talk about a specific post that you wrote called "The Polymarket Bitcoin Trade Paying 63% Annualized with Near Certain Odds." Explain what that trade is, and how those numbers work, how it can be 63% annualized with near certain odds.
So 60, percent annualized, it's around 4% from now until end of the year. So at 4%, seems for, some crypto traders, maybe just a very small return. But of course, the returns can add up. And if it's just over, let's say 3 weeks, it actually, analyzed quite well, especially if the capital can be moved around from trade to trade. And I think the key thing really is to look for these, for these certain certainty trades. And I think there's, different strategies. We outlined, 10 different strategies, in our reports that people kind of could follow. But, the one trade, that you're referring to here is, it's actually around the Bitcoin ETFs. So the question is, can the Bitcoin ETFs eclipse the inflows from last year? So will the ETF flows in 2025 be larger than the ones in 2024? And when, everybody looks, of course, at the daily ETF flows, but if you aggregate them, last year ETFs attracted $33.6 billion US, and this year they attracted around $22 billion. So there's $11 billion difference. So what do you think is a probability that the Bitcoin ETFs will accumulate another $11 billion from now until year end, while they only have really accumulated $22 billion? So mathematically, we can look at this, we can calculate the probability, we can run Monte Carlo simulations, just like how we would, structure, for example, like the option probability. And the probability is literally on a simulation of 200,000, pass forward, is literally, near zero. I mean, it's really like 7 decimal points, behind the dot here. But you can still pick up the 4%. So if you say, well, I don't think that the Bitcoin ETFs in 2025 will outpace those in 2024, because it would require another $11 billion of inflows. I think now we have 14, 15 trading days left only. We have the Christmas holidays. We know that, for example, since October, the ETF flows have, significantly slowed down. We have around year to date, around less than $100 million US of inflows in per ETF, year to date, basically, on average. But we would need $700 million per day. which seems to be unlikely, if Powell would become, more hawkish during the Fed meeting, as everybody sort of like was expecting. That prevents, of course, institutional investors from investing. So long story short, it's really the probability was really near zero. Mathematically, it's impossible, but you can still pick up the 4% by fading this trade. And I think there's a lot of those trades that we have looked at that seem, mathematically impossible. But there still can be, some yield to be picked up. And that's kind of like how we approach the markets.
Okay. So the next blog post that you wrote outlined a whole bunch of different strategies you use to make money on prediction markets without necessarily even having to have an opinion on the actual market or like knowledge of the event, which I thought was super interesting. So let's just talk through all of them. So let's see. The first one is one that you called cross-market arbitrage. Explain what that means and how you use it.
So if, of course, the probabilities on Kalshi versus on Polymarket are different, for example, U.S. election contracts, I think on the midterm elections, there will also probably be some bets placed. There's some bets placed on, Fed, who's the next Fed chairman. And of course, those probabilities can adjust on one exchange, quicker than on the other. It depends on the professional market makers, on the players. It's a little bit, more systematic, and I think needs to have really, fast in terms of like trading capabilities and capital, because they're not working as crypto exchanges where you can simply, send stable coins to one. But that's one strategy. If the odds are very different on one, you potentially can hedge them out on another. And these are like really low risk. I think when you go through the numbers, it's really, we rank them, what is really the lowest risk to the highest risk. And I think we want to be in the lowest risk factors, because that has actually historically proven to make more guaranteed money in this sense, or with the highest probability, because those whole moonshots trades, they rarely tend to work out. And I think the smarter traders, the market makers, they tend to be in the higher probability trades. And that's kind of like how we approach the markets.
And then the way that works is, since you don't actually know which way it will work, are you just betting the same amount of money in both markets or something? And then whichever one wins, you just end up earning the difference between the winning bet and the losing bet?
Yes, correct. But of course, the culture, you have to factor in some trading costs that you might not have on Polymarket. So there are some small differences between the platforms, and they don't make it that easy. I think it's in the in one of the earlier days of crypto, where it was also not so easy to arbitrage one market another. But arbitrage opportunities certainly exist, and especially, for example, we saw this in last year's election, really, because you have also up until now, sort of like different people maybe trading on those platforms, which might now converge with Polymarket entering the U.S. market.
And I'm sorry, when you said that the platforms don't make it easy, are you like saying that they're intentionally trying to not make it easy?
No.
Or okay.
No, I was just saying, because with Polymarket, you can, transfer crypto and it goes like super fast and is immediately in your account, versus on Kalshi, you need to, transfer, capital, and you have to the capital there to take the bet. So it's not, it's not how the modern day exchange arbitrage on the crypto side works, where you can immediately send USDC or USDT around.
Right. Okay. All right. So the next one you called endgame sweep, or late stage arbitrage. What is that, and how does that one work?
So of course, one of the it's very similar as like the probability or the time decay capture really here. I think you can almost put them in a similar bucket here. But the endgame sweep is what I would just argued about the Bitcoin ETFs. We are very close now to the end. Some of those probabilities are literally, a day or even like hours before, where somehow the spread has not closed, but actually the outcome is pretty much determined, right? I mean, it's very difficult for now. I would argue that the Bitcoin ETF suddenly see, $11 billion of inflows if they have only really seen 22 billion year to date. And I think that's one of these sort of like end game sweeps where mathematically it's impossible. And therefore we want to take the bet, because, we can make 4%, and 4%, again, annualized, looks like a pretty decent return.
Right. Yeah. I mean, the way that I was reading a lot of these is like, if you just keep doing it enough. It's almost like a day trader type mentality. Like, the more you do it, just the um your earnings accrue. And so yeah, so then you also talked about time decay capture. So you are saying that those two buckets are the same, time decay capture.
There are a little bit similar. I think usually the time decay is more kind of like if volatility is still priced too high. That's what we're sometimes seeing. Another trade is do you think, for example, that Bitcoin will outperform gold this year? And here, of course, Bitcoin is almost like is around flat for the year. Gold is up 60%. We have 3 weeks waiting. And I mean, you're smiling, but again, there's another 4% to be picked up here. If you bet that Bitcoin will not outperform gold this year. And I think that's kind of like really, the time capture decay here as a strategy that we're looking at. And, and again, volatility of those trades is priced just too high because we look at it from an option pricing perspective.
Okay, so there's another strategy called maker spread harvesting. Explain what that is and how you use that one.
So maker spread harvesting is, of course, more for professional traders. Is really more when the market is really volatile and, somebody just places, a market order, buy at market versus not a limit order, and the market just moves. And I think we have, seen this, how, for example, retail traders just, buy here versus the spread has moved because it's, volatile, and that can be like arbitrage. I think it's more really for professional, with the right trading engines, but that's something, a strategy, of course, we know from crypto exchanges, we know from market makers on TradFi institutions, but that is possible when volatility is high and liquidity is thin relative to the volumes that are going through.
In a moment, we're going to dive more into Markus's tips for how to trade prediction markets, but first, a quick word from the sponsors to make the show possible.
I think there's still quite a lot of skepticism around the performance of decentralized storage, that you can't have both the security of the decentralization and the speed. This is actually why we built Walrus at Miston and Swee. We needed data storage, and there was sort of nothing that existed for a modern performant blockchain. So we built our own, and then we realized other people probably needed this as well. So I would say that, and speed and ease. I think at Miston, it's a whole organization created by engineers. They hate doing anything twice. They hate anything that isn't easy. So they built a system that they wanted to use and they found very easy to use. So I think when people come to Walrus, they will find it easy to use, fast, with all the benefits of decentralization.
Sort of seems dependent on the news moving in some way that makes people a little bit more emotional or something. So is it something where like you would kind of need to predict in advance that might happen and then have some limit orders ready just in case? Or like, how do you prepare for that?
So market makers in general have like, limit orders in the market. And of course, trading systems can move those orders out of the market when prices move, right? So we see this, of course, a lot with, for example, on the crypto side with liquidation stops above a certain level, but then the price moves closer to this level and then suddenly these orders disappear. And professional traders, can do this as well. And then, of course, it's a matter really, how the trading engine is really set up. But I think the interesting aspect is really you're trading, some of these, resting orders that maybe some people have in the market versus the buy at market order. So it's really limit versus, get executed now, really. And I think that's a little bit where, some people maybe they put also, a limit buy order. at a much lower price, and then are not, not on their computer or not on their phone, and then suddenly the market moves, and they're getting hit, for example, right? And I think these are all kind of like these strategies we know from professional traders, but I think it's not one of the core strategies. There are a few other core strategies where, that everybody actually can execute, versus this one is certainly more for the sophisticated traders.
Okay. So there's another one called probability compression play. Explain what that one is.
So, of course, I think the best example around that was, of course, after the October FOMC meeting, the probability that basically the December rate cut would occur, fell dramatically, because I guess Powell wanted to keep the odds more or less balanced, and then we moved from near certainty. I think we moved from something like 80 to 90% that December would be a cut, to just down to 30%, until New York Fed Williams came out and said that a cut would still be the base case scenario, and then we moved from 30% to 80%. So the probabilities have massively changed over time, really. And I think that's also some strategy where we can see that it requires, of course, a little bit, I would say, taking a view. It's not a riskless trade, but if the probability is just like 30%, and we believe that the Fed wants to go at least with a 50-50 market pricing into the decision, I think that makes sense to sort of buy this probability. Or another aspect might be that I think everybody sort of knows that Trump likes to keep his decisions until really the last moment. So betting on a Fed chair maybe now is too early. And of course, Kevin hasn't had 80% or higher really priced in. And that was sort of a way also sort of faded. Now it drops to 70%. But it's sometimes, playing around those levels where the time decay is still very long. But the bet, which is again the probability, is not really reflecting this pricing yet. And I think we have seen this maybe around the Fed chair. We have seen this around US FOMC meeting. And that's kind of how we look at it.
Okay. So you briefly touched on this earlier, but explain a little bit more about why it is that you avoid what you call long shots, and explain what those are.
So apparently, when a low probability bet, which is basically a contract that is below 10 cents, which is only a 10% probability, of occurring. So apparently 60% of all the money that is lost is really lost with these long shot bets, basically, where you take really, if I win this, I can make, 20 times my money. If it's a 5% probability, it would pay out, of course, 100, right? So you're investing, 5 cents, but you can make $1. And, it sounds great. It's sort of like the lottery ticket, mentality, how some people approach it. And I think there has been, various studies that if you analyze lottery playing by zip codes in the US, which of course have to do with, with income levels, you can analyze, who is playing, when people are playing, what are the, approaches. And I think it's a little bit similar with these low probability betting contracts. They have a very low chance. I think sometimes it's, you cannot help yourself, but you want to take a bet because the outside return seems to be, quite large. For example, betting now on a Fed chair that is not one of the, the top candidate, basically can actually lead to an outsized return, but it can also mean that actually the probability just reprices. So you might not need to hold it until the end, but, a lot can happen between now and something is announced. And I think that's something, to look at. And again, I think 60% of all the money that is really lost by the people who lose are with these low probability, trades, basically, which is very similar, again, like with lottery tickets, right? Lottery, one person wins, but, so many, thousands and millions are losing, even if it's small amount of money, because they look at it as, it's fun, it's gambling. But that's, I think, not how the professional traders seem to trade. They really seem to focus more on the higher probability trades, that really going from, high probability to a guaranteed probability. And that's where I think the money is. That's how people can pick up the money.
Yeah, it's like that strategy is more like a lot of small wins, but they're more guaranteed is not the right word, but, more likely, basically more probable. Okay, well, so this actually gets to the next strategies, which I actually found kind of interesting because the way I look at it is, yeah, it's basically almost like copy trading. So one of them you called liquidity imbalance trading, or follow whale flow. So explain what that is, and even how somebody would do that.
So of course, the venues, of course, they're trying to say, we providing the wisdom of the crowds, really, a way to really crowdsource the information. But it's not the wisdom of the crowd, it's the wisdom within the crowd. Because within the crowd, there will be some large players. They have probably, outsized, information. They can trade larger size. And if they're really confident of an outcome, they can place, a big order, basically. And yes, it's a little bit like copy trading, but you need to find the people that are really good. And I think they are the way to find this out. We have seen this, of course, in crypto as well, where some of the smarter wallets being, followed, by various, services. And I think this can be, done here as well, right? I mean, who has a good track record? Who is winning? Who might have an edge in a certain category? Be it, for example, maybe is a very good and with sports betting, or can move the money around, in one category. And I think following those people, makes sense, and it can be a strategy, because if they place the bet, yes, it skews a little bit the odds, but it can still generate some interesting returns, because you want to follow the smart money, right? It's just not copying somebody who is just like a 1-day winner, but it's more kind of like, okay, who seems to be consistently betting larger sizes and seems to be winning in one specific category, so seems to have an edge there.
And so I don't know how it differs on the different platforms, but is it easy to figure out who those accounts are? Like, I would imagine maybe on Polymarket it's easier because it's more crypto, or no?
Exactly.
And so on Kalshi, is it possible or not possible?
I don't think it's possible, but I think on Polymarket it's possible. So on Polymarket it can be done.
Okay, yeah, that makes sense. So then the next one is price sensitivity screening. Explain what that is and also how you're exploiting that one.
So, one aspect is, of course, again, it's really the one-touch barrier options that we need to really look at. Let's say any Bitcoin trade. So, for example, will Bitcoin hit 100,000, by December this year? Or, another trade is, will Ethereum hit $5,000 by end of the year? And of course, both. But if you just focus on Bitcoin to make it simple, of course, we have the one-touch barrier option, and they're priced in a very different volatility, implied volatility, than normal options we see on Deribit or on IBIT. So we can compare, the option surfaces. We can compare the probability. What is the probability that, for example, Deribit options price that Bitcoin will hit 100,000, by their contract expires by December 2026, I think. And then we can compare it, of course, to IBIT, when they expire. And, we have around, of course, a much higher volatility, because it's just like one touch, right? So, if Bitcoin hits 100,000, this, from now until end of the month, it can happen at any time, versus, on the other options on Deribit, for example, or on IBIT, it really depends on, at the end of really the option expiry. So, but we can understand and we can see if there is a volatility spread to be harvested. And of course, the argument is that on Polymarket or on these prediction markets, it's more likely that retail investors are trading on these exchanges. It's a little bit more difficult to exchange, some of your Greeks, your Vega, your Theta exposure, and all these things. But nevertheless, we can calculate a probability, and we come actually to a much higher price probability. For example, when we sent out the idea, there was a 60% probability priced in on Polymarket that Bitcoin would hit 100,000. And yes, maybe this is because retail investors are more enthusiastic. People love the 100,000. People think, the Fed is going to cut. Of course, Bitcoin is going to rally in December, versus on other exchanges, the probability was just, let's say, around, 10, 15%, and then adjusting, of course, because it's a, one touch barrier. So the volatility is naturally twice or three times as much. So we're getting to a volatility in the, I would say institutional market, let's say on Deribit, of around like 30% vol versus 60% vol on Polymarket. And of course, it means you selling, the one on Polymarket and maybe you're buying the one on Deribit. So this is kind of the probability compression here, really, where you're arbitraging one market against another. And I think that's kind of like a strategy we put forward. And, so far it seems to work out.
Huh. Okay. All right. So the last couple are like maybe a little bit similar. One you're calling conditional hedging. Explain, what that is and how you capitalize on those situations.
Yeah, it's just just like a macro event risk. I think that's kind of the initial. I think the initial argument how Kalshi got the CFTC ruling in 2024. Really, arguing that, well, some people want to hedge some real world outcomes, so it's about event contracts, enabling hedging really, and of course price discovery as well. But it was really about these real life economic outcomes. If, for example, I don't know, oil price would be below something, below $60, it's maybe more difficult to do in the futures market, where it has traditionally been done, because there's not a definitive outcome and it needs to be rolled. There's always be some delivery risk, versus on prediction market, it would be a yes or no. And I think that's sort of like the, how insurance contracts are sometimes structured. And I think here it's a little bit similar.
Okay. So the last one, again, is, I think, somewhat similar to what you just described. You call it event calendar positioning. Explain what that one is.
Yeah, Fed meeting, of course, anything around those. But it's also, expecting an event like, political events. And I think that's like the difference, because a conditional, it's really almost like where you have an economic interest in the event, versus the event calendar is really you're betting on an election, or you're betting on, a Fed outcome. I think you can go and, differentiate themselves a little bit more on the technicalities, because there can be some arbitrage involved between different instruments, but I think I don't want to make it too complicated. I think most of the money, again, is on the sports betting, but I think on this strategies that you just outlined, I think most of the money seems to be really in the end game sweep, in the time decay capture, because that's where the bigger money is being played, and not necessarily on these moonshots or other really lottery ticket style trades.
Okay. Well, I appreciate that you walked us through all that. I mean, I honestly found that blog post really fascinating, because it just shows kind of how analytical you can get. I think a lot of people, when they just look at this, they're like, oh, you're trying to figure out what's going to happen in the future or whatever. But no, it's like, you don't necessarily have to have any information about the event. You just have to have the ability to reason about the likelihood of various outcomes, and then look at like whether the pricing makes sense for that event. And then it's not like you need information about whatever this topic is. So yeah, I just found it really interesting. Well, is there anything that I didn't ask you about prediction markets that you feel would be useful for the listener to know?
I think we covered, already, I think a lot. I think we covered, the strategy, I think where people, should focus on. I think the key is really, are you approaching those prediction markets more from an entertainment perspective? But then, just like with any entertainment venue, you're paying an entry price, and, you shouldn't complain if, you have like less money in your pocket at the end of the day, really. But I think the aspect is really there's more and more professional traders looking at these markets and really pricing it from a probabilistic viewpoint. And I think that's really kind of really the takeaway. And that's when we wanted to, explain to our subscribers, that is a probability event. There's a way to make, the money on the, not on a 100% guaranteed side, but on a higher probability side. And I think that's kind of like interesting because everybody, of course, quotes all these predictions. But again, it's really the aspect is in the wisdom within the crowd and not necessarily the wisdom, of the crowd. And it's really finding your right niche, but it's definitely going to be a growing theme going into 2026. And I think the airdrop could be quite interesting where, the more the activity is going to, starts to increase. I think the more, they're becoming part of what we're doing. That's why we're also seeing, of course, all the, from the Robin Hoods being, getting involved, and everybody tries to get some of the pie here. So something is definitely happening, and we wanted to be ahead of this. And that's why we looked at some trades and, explain some, how to really make money on these exchanges or not, or prediction markets.
All right. Well, Markus, it's been such a pleasure chatting with you. Thanks so much for coming on Unchained.
Thanks for having me.